So it's actually been great for us in terms of the flight to safety of people looking for the highly regulated, safe, secure, grown-up TradFi, half TradFi style company. And then as a product person, it's been great to sort of get heads down and build for the next bull market without the distractions and fads and trends and just excitement, and really focusing on where is the true long-term value. Where do we want to make our investments, not just for the next 6 months to ride a hype wave, but the next 5 years.
Okay, so welcome to a new episode to Bitcoin Equities. Today I have with me Dan Opre from Bakkt. Perhaps you can present yourself and your company and tell us about your business model in general.
Sounds great. Hey, everyone. Thanks so much for having me, Jad. Pleasure to be here. So my name's Dan Opre. I'm the Chief Product Officer at Bakkt. Bakkt are a Bitcoin and crypto platform. So we provide all the infrastructure to enable our partners, companies who are looking to build into crypto, who not necessarily got the in-house capabilities, licensing, and custody solutions. So we provide really a one-stop shop for the platform to help particularly US businesses today, but starting to expand internationally, from everything down from custodying digital assets. We're an institutional qualified custodian regulated by the New York Department of Financial Services in a separate, specially trust chartered company. Then on top of that, we also provide liquidity services. So we enable embedded trading. So if you're a fintech or a broker dealer or a neobank looking to provide crypto trading to your customers, then we can actually power the facilitation of the liquidity across multiple different venues and custody the digital assets, as well as being licensed in the US across every state, including New York, with a bit license as well. So really, if you're a business looking to grow the crypto economy responsibly, Bakkt can help service you and your end customers.
Okay, and what about yourself? What's your background, and what led you to joining Bakkt?
Yeah, so a bit of a long story. I've been around the space for about 10 years full time now. Read the Bitcoin white paper probably in around 2013. Was super interested in monetary theory and technology, and so Bitcoin being an intersection of those two was fascinating to me. Jumped in pretty deep at the time, but I just left my previous cloud computing startup and was looking to do another startup, and didn't quite feel that building a Bitcoin startup back then was quite ready for it. So I started exploring the blockchain space. So using the underlying technology to see if there are other applications, other use cases that it could also be applied for. Long story short there, started a company called Hyperledger, which was one of the first sort of private or enterprise blockchain companies and projects. That ended up being acquired by Digital Asset, led by Blythe Masters out of New York. And then helped create Hyperledger, the open source foundation at the Linux Foundation as well, which has many large enterprise members and financial institution members. So I spent about 8 years really exploring blockchain technology generally, looking at a wide range of use cases, applications, particularly within the financial services space, capital market space, post-trade clearing and settlement mostly. So sort of the plumbing, the infrastructure behind how all these assets that people trade ultimately get cleared and settled. So it was super interesting, super valuable space, but not really the area that caught my attention when I first read the white paper. Being interested in internet native money, or being able to transfer value globally, borderlessly, programmatically, without full need for the many intermediaries that are needed to clear and settle not just money but other financial instruments today. So left that about 3 years ago. I'm starting to think about what I wanted to do next. Knew I wanted to focus on Bitcoin, get back to the roots, and then came across Bakkt as that a company that had both the large come out of the Intercontinental Exchange and was just about to go public on the New York Stock Exchange, a large, trustworthy institutional basis that can really get scale, but also still small enough, being a spin out of ICE, that it still had some of the pace of a startup that I was more used to. So really feel like one of those few companies that was the balance of scale and pace. And then also, being a crypto native spin out of a TradFi institution, again, can serve as that bridge between those two worlds.
Yeah, I find this quite interesting. Perhaps you can walk us through the making of Bakkt from ICE, and then I think from my memory, there was a SPAC or a reverse SPAC that was in place. Can you walk our audience towards the making of Bakkt per se?
Sure. Yeah. So Bakkt was created inside ICE in 2018 as an internal division, as the crypto play. ICE, primarily well known for the futures derivatives exchanges, also acquiring the New York Stock Exchange and equities too, but really started focusing on futures and specifically physically delivered Bitcoin futures. So the ability to trade futures, but then actually settle and receive the Bitcoin once on contract expiry. And so in order to do that, ICE already had ICE futures exchanges, but they didn't have the custody piece. So they created the Bakkt warehouse, which, much like cotton or other commodities where you would store commodities, was named to store, receive delivery of the futures and store the Bitcoin. So that really became the core custodial piece of our offering that still serves across the business, both supporting the retail side of the company as well as direct institutional businesses. From there, as you mentioned, went through a SPAC process after becoming an independent company and de-SPACed our IPO onto the New York Stock Exchange in 21. And since then, we've also acquired another new business, Apex Crypto, which is a crypto trading platform similar to us, enabling embedded retail trading experiences to a whole host of fintechs, including Webull and Public.com and many more.
Okay, that's quite unique, actually, and quite rule-breaking in terms of development, because it's one of the biggest TradFi to crypto moves I have ever seen. And what's the rationale behind it? Do you believe that TradFi are well suited to serve crypto customers better than new companies or startups or companies like Coinbase, for example?
Yeah, so I think really, to answer that question, I sort of point to the last year and a half. I'm a big fan of startups, a big fan of fintechs and disruption, but really in financial services, when you're custodying people's assets and you're holding their wealth and their livelihood, crypto is not an asset class where if something goes wrong, you can go to the courts and fix it, right? If your Bitcoin is stolen, it's on a irreversible, immutable blockchain, and your chances of getting that back are very slim. And so this is not a move fast and break stuff kind of space when you're dealing with custody of assets. And I think we've seen over the last year and a half with FTX, with Prime Trust, with Genesis, numerous examples of crypto native startups that are trying to disrupt the space, but don't have some of the rigor, some of the governance, some of the regulatory compliance, some of the oversight and governance in some cases that TradFi companies do every single day. So really our goal is to be trusted, but not just by asking for trust or because of our heritage, but because we're a publicly traded company. We have audited financials, we're highly regulated. We're compliant first across the board. And so when it comes to choosing a crypto partner, I think, getting that balance between innovation and safety. But with this space, it's always best to err on the side of safety and uncompromising custody solutions where you've benefited from that experience, that deep history of the TradFi space, but still have the team and the innovation needed to participate in the crypto space.
Actually, that's something that we're very familiar with. I mean, we built our ETF around Bitcoin equities because we find that the custody of equities is much more developed and secure than the custody of crypto itself, at least from 99% of the custodian solutions that are out there. How would you advise someone when looking at custody to choose from different custodians? The thing is that there are some regulations that came. Even in the US, you have like different regulations regarding custody from one state to the other. Then you have like outside of the US, different custody regulations. Some are very harsh, some are very light. What is the gold standard of custody?
Great question, and a challenging one for people to work through. So I would say, firstly, look for what in the US we call a qualified custodian, an entity that meets those regulatory requirements to be able to be called qualified. And as you say, there are many different types of state-chartered trust companies for custody. In the US, New York, Wyoming, Nevada tend to be the most popular. To your question on sort of gold standard, I think widely New York is considered to be the gold standard, the most stringent, the most thorough, the most experienced in this space as well, not just because of it being a financial services hub, but also because they created the BIT license several years ago, which was really the first state-based sort of comprehensive framework for virtual currency providers. And so I'd look for, a New York DFS trust chartered company. There are about 8 or 9 of those, including us. And then beyond that, I'd look at, what is their technology architecture? What proofs do they have? Have they got SOC 1, SOC 2? Do they have audited financials? Do they have an independent governance board? So whilst Bakkt Holdings is a publicly traded company, Bakkt Trust has an independent board of managers chaired by the chairwoman of the New York Stock Exchange and has a separate independent governance and oversight structure to it solely for the custody portion of our business. And related to that, I'd say there are many custodians that are part of exchange groups themselves or firms that have trading or prop trading or take positions and risk. So, if you look at most of the crypto exchange or custody, particularly on the retail side, it's vertically integrated from exchange, clearing, settlement, custody, broker-dealer, in some cases even prop trading, all bundled within a single entity. And the more risk-taking positions the company takes, the more at risk the assets under custody are in the event of bankruptcy. And we saw a terrible example of this in the case of FTX, where customer funds custodied by FTX were misappropriated and used elsewhere. But it's also possible for exchanges or riskier business models to have challenges and bring the custody portion into the bankruptcy proceedings. So is the custody bankruptcy remote, held in a separate trust? Is it highly regulated by the gold standard, New York DFS? And does the company have the auditing with SOC 1, SOC 2, financials? Are they a public company? And then lastly, do other parts of the business engage in risk-taking activities?
Yeah, actually, what was really mesmerizing to me was the fact that when FTX blew up, what we saw is a massive inflow of cryptos into offshore exchanges as if they hadn't learned their lesson. Have you noticed this trend or not really?
I think, talking sort of specifically about the US and the rest of the world, we've seen a little bit of a shift in that the US has taken a very stringent regulatory approach. And in particular, the SEC has done multiple enforcement actions against exchange groups here. And so the ability for US crypto companies to have the same breadth as the unregulated, in most cases, unregulated offshore entities has meant that some, less risk-averse retail traders in particular, or maybe crypto-native hedge fund types, have looked to take that risk by using these unregulated exchanges because they don't have a regulated, compliant domestic equivalent that they can necessarily go to today. So, to the regulation point, I think that's one of the balance the regulators need to think of as well. If they tighten things up too much or are too stringent or too restrictive on what US companies can do, then really they end up forcing US consumers into unregulated offshore exchanges where the same consumer protections are going to be worse. So for the regulators, again, it's that balance of how much do they regulate to protect consumers without pushing consumers offshore.
Okay. What is the latest developments on your end? What was 2023 like?
Yeah. So I think, as the product guy, I think one of my favorite things of 23 is that it's actually been a little bit quieter, in particular than 21 and 22, where it was an extremely eventful time, both in terms of hype and buzz and prices going up and everyone getting a bit over enthusiastic, over exuberant, and perhaps showing less nuance and less discretion in the types of businesses, types of business models, coins, and products that they were using. Now that there were a lot of blow-ups, I think it's first front of people's mind that actually these things that companies like Bakkt were talking about in 2018, 2019 are super important, super relevant for for today, and that's been proven out in the market. So it's actually been great for us in terms of the flight to safety of people looking for the highly regulated, safe, secure, grown-up TradFi, half TradFi style company. And then as a product person, it's been great to sort of get heads down and build for the next bull market without the distractions and fads and trends and just excitement, and really focusing on where is the true long-term value. Where do we want to make our investments, not just for the next 6 months to ride a hype wave, but the next 5 years.
Okay. And there's a lot of news currently around the Bitcoin ETFs and getting it approved. Could you service this kind of client?
Yeah, absolutely. I mean, our custody solution ultimately with spot ETFs. So as you probably know, many Bitcoin ETFs have been approved before, but they've been based on cash futured, financially settled futures projects. So there's no actual underlying Bitcoin involved. But with the latest applications for the Bitcoin spot ETFs, that Bitcoin needs to be held somewhere securely. And so Bakkt's custody solution is a very viable candidate for the ETFs that are being submitted. And I think, again, another thing that people have learned over the last year is don't put all your eggs in one basket, right? You want to diversify your risk. You want to have multiple different providers. And so there's only a handful of institutional grade custody offerings in the US that something like a spot ETF could leverage. So it's pretty important there for these ETF issuers to have partners who can help them get through that process as well, and give comfort to the regulators and to the SEC in particular that there isn't risk at the custody solution. So Bakkt's very well positioned in that space.
Okay, and still on the custody side of things, how do you see this? How do you see the environment evolving, and who are your main competitors, or what do you compete with? Because there's a lot of sayings in the Bitcoin space: "Not your keys, not your coins," etc. So, how do you see it evolving on the long run?
Yeah. I have my personal views and my professional views, right? Personally, I'm a Bitcoiner. I'm a huge fan of self-custody, but I've spent the time to understand and understand the risks of self-custody. And I've, had challenges in the past of forgetting passphrases and things like that. So even someone who's deep in the weeds, self-custody today is still challenging. It's not super convenient for the mainstream user. At Bakkt, we're really focusing on how can we mainstream this to the next 100 million crypto users, and not just the sort of diehard niche of selling to myself. But yeah, the next 100 million, and then also building the infrastructure for institutions to actually play. To your point earlier on sort of relative to the equity space is all that in space. So I think for the next few years, really what's key is security and convenience. So those are the two big pieces. And self-custody maybe in the future becomes a more viable option as that becomes more convenient, as backup and recovery methods become simpler. But really in the short to medium term, most mainstream, everyday, diehard crypto natives, they want to trust a third party. They want to have their assets held by experts. They want to outsource that knowledge, expertise, operational pieces, compliance, regulation to an entity that can provide it for them. And then over time, you can withdraw and you can go into self-custody if you prefer. But I think for everyday people and for large institutional clients, RIAs, there are regulatory requirements over where they can actually store those assets as well. So I think custody is always going to be around. It's got a huge potential for growth. And self-custody solutions will improve over time, but probably won't see it being a significant portion of the market for the next 5 to 10 years for individual consumers.
Does the regulation allows for you to lend the coins you have in custody, like in the equity market? Although I have an equity custodian, but he offers also the service if I want to lend my shares to get a certain yield or a repo on my shares for the funds that want to short the equity that I'm holding. Does the same regulation applies in your case or not?
Yield generation broadly is a challenging regulatory topic, right? So you mentioned, lending the coins, or there's also other forms like staking. The SEC has taken the position that anything that, broadly speaking, anything that is yield generating that comes with an investment of capital is a security. So both from that point of view and also because it is a highly risky space, to the point earlier on, if you lend these coins and the person can renege or cannot pay them back, there is no direct way to recover those specific coins. So lending has been one of the challenging spaces where high yields and attractive APRs have led people over the last couple of years to chase that yield. But with Genesis and BlockFi and many of the main lenders, we've seen that actually managing the risk and the credit and positions is incredibly challenging. So I think it's probably possible to do it in a regulatory compliant way for a subsection of those use cases. Bakkt does not. We choose not to. So our assets in custody are the assets in our custody, I should say, are our customers' assets, not ours. We don't rehypothecate, we don't lend, and we don't enable, even with consent, our customers to lend today.
Okay, interesting. I mean, I hear you well on the arguments for using a custodian. I've been a Bitcoiner for a while, and I started with self-custody, initially on my phone, actually. Then I realized as price of Bitcoin went up and the amount of money that I had on my phone was getting bigger and bigger, it wasn't safe, so I went to Ledger. But then I was in Beirut during the port explosion, and my ledger was in my safe, and my seed phrase was in my jacket, and they all flew out of the window.
Oh wow!
So I was like, shit! I would have lost everything. I had to recover them, from within the ashes. I said, okay, if I couldn't find them, I would have lost everything.
Was it a fireproof safe at least? You had to go and dig out the safe to get the ledger
out?
Wow.
It was fireproof, exactly. And then I started like questioning like all the extreme scenarios, like what if I die? What if so many things can happen, that I switched back from a maxi custody solution of just holding my coins into a centralized solution, because I mean, I've done my homework when it comes to custody from my background in the financial markets. So I know that when it comes to custody, the regulator is very, very, very stringent. And as time goes by, it's gonna keep on going just one way, basically. So yeah, I think this is definitely something that people should be looking at and should be considering. One thing I failed to find, and I don't know how you manage it, is insurance, because there's a lack of insurers in the crypto space. And I had looked at several US-based custody solutions, and they are insured up to a certain amount. How do you deal with insurance on your end, or how do you guarantee that these coins won't be lost or won't be hacked or?
Yeah. So we do have insurance from international providers covering as you say up to a certain amount of the assets that we hold, and that includes breakdown of thresholds between what we call warm wallets, or typically sort of hot wallets, but with manual intervention. For those not familiar, hot and cold basically means internet connected or not. And then, so there's only a certain amount, according to that insurance policy and our regulatory framework, that at any point we can hold in warm internet connected wallets. The rest is stored in cold storage, fully disconnected from the internet on multiple different devices. We have very stringent ceremonies around how people can sign transactions to withdraw. So there's multiple different people, without going into too much of the details and revealing security, but a lot of different people involved with a separation of duties between them that require X amount of them to physically be co-located in a location with where we have a bank grade vault that stores the private key material. with a man trap, and thumbprint readers, and all the rest, sort of almost Bond villain layer security around these. And then, of course, that's resilient with multiple different sites. Should as you point out with your personal holdings, should there be any localized challenges. So, by design, it's actually a very cumbersome process because it does require so many people to coordinate and physically be co-located. Then there are additional checks and balances beyond that. But that is so that no individual or even small group of individuals could conspire to access those funds. So they're highly secure.
That's quite impressive. I didn't know there were so many layers of security going on. Okay, interesting.
Physical, operational, cyber. Yeah, we take it very, very seriously.
Okay, and maybe one last question about the future. What should we look at for future catalysts for the share or for Bakkt in general when it comes to the next phases or the next developments on your end?
Yeah, no, I think, as I sort of briefly mentioned earlier, really, we're trying to play the long game. We're not chasing the fads and the hype of the day. We're trying to build that infrastructure that's going to last and be secure, be regulatory compliant, and be innovative within that as well. So I think the big things that are happening, trends in the market in the space, is that flight to safety, looking for partners that are trustworthy, that have never had issues, that have that oversight and the audits and all the rest that we talked about. And the institutions are in the space, and I don't like to say they're coming because we were born out of one 5 years ago. Many institutions are active in the space today, and I think over the next couple of years, now that the infrastructure required for institutions to participate in the crypto space is largely there, we're going to see huge influx from those entities and move from the crypto native hedge funds to the larger entities. We've got separated dedicated exchanges that have been launched over the last year that don't combine with custody, and separate custodians that don't combine with exchanges. So the market structure is starting to look far more like that of traditional equities, with the separations of concerns between the different entity types, which I think is really key for institutional adoption. And then on the consumer side, I think trading is still largely where the money is today, and people are speculating on the future value of these assets. But personally, I think that speculation is on what is going to be the utility of these future assets beyond just speculation or a store of value or inflation hedge or sort of the digital gold narrative. So where I'm personally most interested and passionate and excited about is actually leveraging these assets for their utility. And the most exciting portion of that for me is Lightning, the layer 2 on Bitcoin. That allows for instant final settlement and almost free transactions. As you know, one of the biggest criticisms of Bitcoin is that it's slow and can only do so many transactions per second. Lightning absolutely changes that narrative. And where we're looking within that space, still early, small team, but hopefully have a couple of announcements coming up soon. Is around remittance, around moving money across borders, where the biggest pain point is today. And particularly, I think what will be really interesting, especially as a product person, is actually abstracting all of that away behind the scenes, right? So we've seen last year people were interested in NFTs because they're NFTs and they're new and they're shiny and they're interesting, rather than necessarily just what do NFTs enable that you couldn't already do. So for me, when you actually abstract away the technology, the protocols, the crypto, the exciting new pieces of it, and just say, I've got dollars, I want to send you euros, pounds. And then I do that. And behind the scenes, it's being converted into Bitcoin, remitted over Lightning, and then converted back into the local currency. And the user actually has no idea that behind the scenes crypto rails are being used for that settlement. I think that's really when we'll be proving a true product market fit at scale for the mainstream, and actually, bringing the value of this for real.
Yeah, actually, it's amazing. I wasn't expecting to have the enlightening conversation with you today, but since we're at it, I'm really also very excited with it, and I've been using Lightning as a way to orange pill everybody around me. Like, it's saving me so much time and words and energy orange pilling people. Just when you send like $10 through Lightning, they go like, wow, how easy it is and how quick it was, and the cost is close to zero. So it's like really mind blowing. However,
it's magic.
What I also noticed is like we're so early, in this space. The technology is there. We just need to be able to have in every Lightning wallet like USD, Euro, Bitcoin, and that's it. Because at the end, it's just like one breach from crypto to fiat, a way to be able to do it. And I've heard a lot of people talking about it, but not a lot of actual things happening. And when I looked at it, I found out that when you go through when you're selling a Bitcoin wallet or a Bitcoin wallet solution or a Bitcoin even custody solution, it's completely different from the Lightning, because you become a financial payment institution, and then you go through regulation which adds all the burdens of being regulated in all the countries you want to send all these fiats. So don't you think like we're going to go back to the initial problem that we had before? I mean, Jack Mallers from Strike have been talking about this idea of sending fiat through the Bitcoin network for a couple of years now, and I was expecting it like to be already. I'm based in Europe, so I couldn't. Like every month I check for his app, I cannot find it, and most probably it's for regulatory constraints. How do you think this will evolve in a lightning speed, I would say, compared to the fiat speed?
Yeah, I mean, similar to our previous discussion on sort of trading and equities and clearing and settlement and piece, right? This stuff is hard and it does take time. And as you say, right, if you're a non-custodial wallet provider, you're just a software company, then you can make the case that you're not a money transmitter. You're not involved in that. But if you are facilitating conversion to the local currency, or you're acting as an entity actually doing that transmission, then you do need those regulatory licenses in most jurisdictions as well. So I think no one's going to build that end to end in terms of one company having all of those endpoints. And if they did, Lightning would probably be less needed than it otherwise would. But what's starting to be built out now is just various different on and off ramps. So we, for example, in the US, we have MTLs in every state that requires them. We have the BIT license in New York. We just launched a fiat on-ramps product that's used by the likes of Webull and blockchain.com. And so that enables us to have, and then combined with the liquidity and the custody piece, we can handle the regulatory piece of the licensing, the dollar movement, funding sources, the conversion into Bitcoin, and the actual custodial piece under the hood. And then we're working with partners across the world where they'll provide the same solutions in their local jurisdiction. So that'll be the off-ramp if it's US to them or vice versa. So those are being developed in different countries. Some will move faster than others to get that sort of mainstream convenient user experience. It will still take a little bit of time. Lightning's 4-5 years old now, but still relatively early. But really, the tooling, the infrastructure, the on and off ramps, and then the compliance pieces as well are really starting to be solved much more effectively. And to your point earlier, like, is this just going to end up with financial institutions being the on and off ramps? I think maybe to start with, it will still be far more convenient than the financial institutions and cross-border remittance that exists today. Far cheaper, far more instant. But then over time, as people get used to it, they can opt in to have the convenience of solely trusting a single third party, or they can opt to move to a more non-custodial, self-sovereign solution if they like. But yeah, certainly for providing that conversion between Bitcoin and USD and the actual money transmission portion, that is a regulated activity in most countries.
Mm-hmm. Okay. Thanks a lot for your time. It was a very, very interesting discussion. I hope to have you on the next episode. As soon as you have anything new to announce, please give us a ping and we'll jump online. Thanks a lot, Dan. It was very interesting, the discussion.
Thanks so much for having me, Jad. Really, really enjoyed it.